Hello there. This is Fari Hemzi, coming to you from lovely downtown Cape Naples in Florida, Southwest Florida. Time is 4:37 p.m. It's Wednesday, May 3rd, 2023. Okay. Um, okay. Um, don't have any housekeeping stuff to do other than that we're picking up a little bit of speed now on 5.0 for the orb, and we're trying to finish a module for me. Again, we found another gap in how TradeStation lets you know what your if you're in a multi account trading, what and they're segregated, not running as a gang order, but segregated to show what your positions are, what your how much risk you have, how much stops you have, how much exits you have, that sort of thing, and we recognize the dome, which is the depth of the market, or some people call it matrix, its shortcomings during especially fast markets. So we have a very lean and mean module we're building to just interrogate the account. Go outside TradeStation, go to the accounting of TradeStation, get the data, come back in. It's called Data Provider. And we're privileged for the guy who joined us to help us. And all of TradeStation people say, if anybody knows that, is this guy. So, and he's doing our 5.0. This module will also be used in part of 5.0. But so I'm in a rush to get to a meeting after this. Last night, a mock-up was used for the buttons. It's a panel we built. The spec is already finished, and then we're going to hand it over to him, where he starts programming it. And I think he can do it in 2-3 days. It's not that big. And then he goes to 5.0 because he's got now about 3 weeks of idle time. He was middle of a very, very large project. If you're familiar with the TradeStation App Store, he's been the force behind that. And but TradeStation doesn't want it. It's kind of orphaned a little bit. I don't want to get too much private info, but he puts a bunch of investors together, a group out of Israel, who like this trading app project, which is basically you buy systems or you buy indicators on a monthly basis, and the TradeStation itself authorizes you and all that. It makes life a little bit easier. I'm not going to put any of our stuff there. Our stuff is far more pricier and involves training and all that. We don't want anybody to grab an indicator and run with it by himself. Why? Because they're going to get into trouble real quick, and they're going to blame me. I have a brand name. I've been around 25 years. Same name, same phone number, same email. I'm not going to risk that. I don't need to. So, but I think we got a good brain trust here, if you will, and they helped me learn more. I've learned a lot the last 2 or 3 years. My attitude always been from even Northrop days. Surround yourself with people better than yourself. That's how you're going to learn. And that's where we are. Let's just jump here quickly on Econ Calendar, then we hit the charts. Okay. Couple of things to think about. Tomorrow, Apple reports. Plus, we have, of course, jobless claims. I'm not too crazy about productivity, but trade balance key at 8:30. So we could have a little bit of a move there. After the close, Apple reports. Then you got the big daddy of them all, which is the employment situation, non-farm payroll, on Friday. I think that's going to be stronger still. I think so. I think we're gonna have a little bit pause in the numbers of jobs, not low or negative. The data for the economy still is very strong, and yes, JOLTS showed us. I think I don't know what ADP did yesterday, but JOLTS was there we go. Here's JOLTS. Let's go over JOLTS first. This showed some easing. Okay, below the range, obviously. A little bit above the low end, below the consensus by a small amount of the openings. I think part of that is also, as I said before, these bank takeovers are anti-inflationary. Basically, what they always do is give everybody a pause, and some CEOs will and HRs run for the hills, saying, "Oh, we don't need all many recs. There's a number of recs acquisitions. It's got canceled." I think that's all good. Why? It'll get closer, the Fed, for us to ease in terms of timeline. Now, notice today, interesting item that I noticed on the comments that was being parsed and posted on Bloomberg and CNBC, that Chairman Powell said there was no discussion of pausing here. So I expect the 0.25 to continue. I know they're data driven, of course, but we really need to get to positive real rates. We're not there yet, in my opinion, which is the rates above inflation rate. That's how you bring inflation down. Just case in point, Paul Walker, the former chairman of economics department at Princeton, and he came in after the malaise that the peanut farmer was talking about, Jimmy Carter, and he had nothing better to do than raise the rates very high. We can't do it now. Why? Because we have so much more debt. Remember, when Reagan came in, that was about 1 trillion. When Bush came in, 43, it was at 10 billion. And look where we are now, 31. And the problem with also with inflation this high, you already have to, the rates are going to be higher for financing. Listen, we're borrowing to pay the interest itself. And a cost of living adjustments for entitlement. It's just, we're in a very bad spot, guys, okay? So the way I look at it is somebody's got to give. Now, what's going on in Washington? Let me address that, the debt ceiling. That's a big problem. We've always talked about Catalyst. I don't know what the deal was with Auntie Jeanette, now the Secretary of Treasury. Say we have June 1st to worry about. Here's the thing she didn't tell you. There's 7, as of last night, there were 8 working days in Congress between now and June 1st. Okay? As of today, 7. These guys can't decide to go to the bathroom in 7 days, much less what to do with the debt ceiling. So we're in a pickle. I don't think anything. I think they're going to punt. This meeting next week, they're going to punt. They're too far apart, and there's just not enough days to work anything. So I think we're in for a good shake. Market-wise, go through your portfolio, get rid of your Bawa stocks, dump them. Okay. I don't know. The small caps were up about 0.8% today, or 13 handles on the future side. We were down about 0.45 on the NAS and about 0.5% in S&Ps. In the intraday, I said watch for S&P close at low of the day, and we just pulled up in the last couple of hours. But I believe at 4 p.m. At 4 p.m. when we closed, let me bring this to you. Here's the futures. At 4 p.m., which is 4 p.m. is this far. Look where we closed. It hit the low of the day. We closed just above it. Okay, and of course this was the scene of the crime. This was 2 o'clock communique from FOMC. So incredible run here. It was absolutely incredible, beautiful. So our PMT trade that went out today, it went out around 1 o'clock. Actually, like 1:10, something like that, 1:12. You had about 45 minutes to get in. I didn't want to compromise that. I had said earlier, I think it was yesterday, I said, this is what we're going to do. Or was it Monday? We said we're going to make a call, and then the following day, we're going to put the trade on. And Monday. So Monday night, I think we went short. I forget. Yeah, Monday night we went short. And here's was the reason. So to be absolutely clear here, this was the reason. This bar, that little bar right there. But we had this huge bar on the. Remember, we met here. I said we're going to bounce. We're going to bounce. Everybody said, no, we're going to go a lot lower. I said, no. Short term wise, we're going to bounce first. Why? They're going to juice it up. They will juice it up into FOMC. What changed the ballgame was Pacific Western, I think. Pac Western, whatever. Then the bank got into trouble. And so going into Thursday and Friday, because of the EPS of text, was very strong. I missed that. I was so tired. And you have to issue your bias to Time and Digest in the evening. I missed that. I wasn't going to do a formal here. I said, okay, let's see a topping, and topping came on Monday. Small bar, kind of jammed in sigma levels. We were, I think, down tiny bit, 1.6 points in S&P. I said, this is it. So we went in. Nice day, nice 2 days. Now remember, we have 3 weeks to go. But again, I'm saying this so it's recorded. You know, Admiral Tico reserves the right to intervene to maybe Monday, Tuesday. We get too near our goal to cover a whole thing. Okay, because there's going to be, when you're in this problem, we're going to have a lot of tug of wars, a lot of back and forth. Plus, you got a tail end of earnings season too. So be prepared near your email to get our exit command. Of course, we'll also tell you on the Twitter too. My Twitter is @HamziAnalytics. So as fast, or @Admiral_Tico. Okay, whatever you guys follow. This way you can get it on your phone. That's the beauty of using Twitter. Now back to Econ Calendar. Here's what I'm thinking. Let's look at ADP. What ADP did. I seriously, I missed it. It came very strong. That's it. There we go. I did not see it. Probably was posted in the chat room, but I hardly slept last night. Tico was sick, woke me up twice. I had cat naps, and I just didn't want to even trade because early in the morning it's sausage ahead of FOMC. But so I missed the 8:15 data from ADP, which is a fairly decent tell about how non-farm is going to be, except this is all privates. Why? Because they run the payrolls. This is ADP payroll operation. This is an offshoot of it. You can't get any cleaner data. It's real time because it's all electronic. Unlike BLS, where it does interviews and does surveys of households and all that, this is right there and then. I mean, this data, they have this data constantly. Of course, but they give it to us once a month, 2 days before non-farm. Look at where it was. 145, 142 revised. Always look at the revisions. 143 consensus in line with the revision and becoming more than twice. So here's my take here. Going forward, we'll see what jobless claim is. But what's important here tomorrow is at this time. What's that? Apple. If Apple misses, and this number, what is the number? Hold on. They're expecting 178 was a consensus in that range, near the higher end of the range. And we go like ADP, maybe double or maybe even 50% higher than 178. So let's take a number. 178. I mean, I'm just looking at this. I have not looked at it. Comes around 260 or better, you're going to have one hell of a weekend. Lights out. Because as Apple misses, and this number comes big, there are 2 ifs. Nobody can guarantee that. But if both come in that mode, you're going to have a bloodbath on Friday. Because this says Chairman Powell has really no business of easing. And today he said there was no easing discussed. So remember, they have a bunch of models they run constantly. There are a bunch of PhDs over there. What we call the building temple in the Federal Reserve Building in Washington. And so from what they see, maybe that's why they didn't even discuss easing. From this my take. Obviously, I have to read more and see the analysis. But I remember I'm in the middle of a futures trade. So it could be very, very big tell next 2 days. And then on top of it, you got the debt ceiling. It's a perfect storm. So get rid of your Bible names. Figure out. Hi, Thomas. How are you, sir? Welcome. Figure out what. Hi, Michael. How are you? By the way, we mentioned you earlier. Thank you, sir, for that banter last session. It was spot on. So be prepared for a move down. Now let's go to charts because I think we're done here on the calendar. But it's going to be an intense couple of days. Okay. Look at where we're set up. We came down from 2 sigma. That was another one. Well, 2 sigma plus. Remember, SPX has a tendency of not going much above 2, and usually not much below -3. There's a little bias on the downside. Why? Because fear. Okay, but and we put our stop somewhere near the 50 bar. You look at the way I pick the pairs, and also the distance of the pair, the high to low, and premium you pay. I learned that from Admiral Esposito for years and years of playing the spread. It was one of the better deals I've ever seen in a while. It was a no-brainer what spread to pick. And we put it out and went out to our people. One guy wrote back and said, "Awesome trade. I'm so happy." I said, it was pure luck. And he goes, "Yeah, right, sure." Yeah. But but it was lucky too. Obviously, there's always a luck in trade. So discipline is important, knowledge, courage, but there's also a little luck. By the way, good thing to listen on Ari Melber. I know I agree with his politics, but he was interviewing McCraven, Noah McCraven, who was the head of JSOC that did the Bin Laden raid. And he was interviewing him, and he basically said, as a good commander, he spent 37 years. At one point, he was the Bullfrog, which is the oldest SEAL team member. He said it takes, in his opinion, it takes 3 distinctive traits to be a good commander, and that is number 1, courage. Okay, number 1. Number 2, let's see, discipline, courage, discipline, and honesty. It says it takes all 3 to be a good commander where other people follow you. So think about that. Remember, we're in a war zone. Don't kid yourself, especially if you're trading options or futures. Be prepared for that. Oh, I'm sorry. Take that back. Let me reset. Edit 1. Number 1, courage. Number 2 is stamina. It's crucial you have stamina. Make sure you exercise. Make sure you sleep well. Make sure you're hydrated. And number 3 was honesty and purity and focus, because you're setting an example. But anyhow, I think we're getting set up to go back down. I haven't seen any divergences yet, but we probably will see something at 50. I think because that's the 3 sigma right now, negative 3 sigma. I think that would give us a double support, both settings. But I would not be surprised if something else gives and we go whoosh, and we take 39.75 or 39.60 or 39.50 out in this leg with our trade. Now, we did not put our goal there. We put our goal somewhere around this 50 bar. So as we get close to that, remember the parity equation in the options. You have the pull spread, you have call spread. They're not equal. There's a little parity equation, there's a differential. So once we get around this point, we're going to hit asymptotic return. That is, you cannot keep pushing it. There's very little return, extra marginal return, but the risk is adding up now to snap back. Okay, so I'm just want to, for the record, share with you that those of you in PMT, be prepared, starting, let's say, Monday. Okay, be ready for Admiral Tico to step in and intervene and say, close everything now at my command. Boom, boom, boom. Get out. Why? Because we're going to get to our target level. Remember, I think this was, I forgot what the range was, but there's that percentage. You take the dollars away from the premiums you paid minus the range. That's all the balance you can make. As we get closer and closer to it, you want to get out. Why? There's a decay. Yeah. As we slow down, the walls will collapse. Right now, walls are exploding. Let's look at walls here quickly. Hallelujah. That's it. Actually, look at what it was yesterday. These will explode. That adds to our premium, adds to our position. But it can't go on forever. So that combination where the VIX is, or for that matter, this is NDX, the VXN for NDX, there will be a call. There will be a call. Just be on alert. Okay. Let's go through timer charts. Okay, we give back quite a bit on breadth thrust. We're beginning to get close to a sell area on S&P, and this usually gets harder here leads because of interest rates, because of Fed and all that. Less so with the big caps text. We already had the second push down on the CIDF, so I think Give it the next 2 days because they're news driven, both Apple and non-farm. I think non-farm will disappoint the chairman. It's going to be strong. Apple, I don't know. Okay, that's to me, Apple's toss up. But if Apple shows any bad guidance or CYA from a CFO, then you set up for almost a perfect storm. You got those two plus you have debt ceiling. Okay, so that's why we go into next week. Now, this is a good divergence, except we're not low enough yet. So we still need the rule of 3 days says we have to have one more move. So tomorrow maybe we're quiet. Tomorrow probably won't do anything during the day because the Apple reports after the close. So we really probably tomorrow we're going to be sideways, but tomorrow, Friday, you got two combo, impact of Apple and non-farm. If they both go, Apple is negative and non-farm is strong, they're double negative in push on the equities. And you could have a massive sell-off on Friday. And another axiom to think about, sell in May and go away. So all of it's coming to a perfect storm. Okay, make sure you're psychologically ready for that. And nobody can do it for you other than yourself. So. All right, canaries in the coal mine. We dropped 270. I think we closed near the lows, didn't we? A little bit higher. That's 18 points from the lows. I expect it to be a little bit bigger. Actually, that surprised me. So industrials did better than I thought. Transportation, sideways. Actually, slightly up. Yeah, but sideways. Yeah, pretty much. But we're below 50. And we're trading, hovering at 200. If this let go, next couple of days, that's another tail. And this is a big tail. Russell is just... Russell is looking at multi-year lows now. And that part of this is interest rates, short-term interest rates. Yeah, front end. The trender, okay. Plus, that's 2. That's 3. That's neutral. 4, right? 1, 2. Yeah. 4 up. 1 neutral. 3 negative. So you got 430. 431. I'm saying 431. Kind of mix here. But look at the chart. Listen, 50 bar is coming. 50 bar may be a support here. But these two say, because they're the death cross, we should be going lower. I will see. Again, we're reading tea leaves. There's no guarantee. Let's do on Momo. Okay. By the way, this was a big tell for me too. All of a sudden we popped. This is the number of weekly highs. 52 weeks high for pure S&P only. Okay, so that the totality here is 500 names. This was about 32, 34, 33, whatever, for highs, and these are low. None of them are giving any signal except this pulled up a tad, and we'll see. It's not as high as I thought. It's not like in here because when you get these, you know the roll is coming, a rollover is coming. So far we're kind of neutralish there. SP1 -2 sigma. Watch for it when it hits 3. So that's what I'm going to be watching intraday next couple of days. Let me make sure we're clear, by the way. Here. Oh, one more thing, guys. I want to make sure this is clean because I think this was on. I think I turned it on after the close. Yeah. See that it pulled back a little bit. Yeah. Okay. I think the machine was on right about the close. You have to wait a few minutes. So I manually refreshed it. So we're plus. There you go. See that? Yeah. This one too. So we're at +1. Yeah. There's component. There's a bunch of data in here. This is a bunch of data series in there, and we don't plot them. We just plot the results, and then the special Sigma channel was written to encompass all of that because the Sigma channel, so you know, works off of data 1, the data you put in. Okay, this is not data here. This is all a bunch of data, and they're not the price. Okay, it's the internals, tick, advanced decline, volume up, volume down, volume VIX. There's a lot of stuff in there. So it has a weight column, volume, a weight file that gives it the time series. This time series is at 231 right now. It's that value. Then around it, you put this special Sigma channel so you can accommodate multi-data input. What we look for is against itself what it's doing, and we're at +1. I would say -1 sigma. Before my refresh was -2. So yes, now it's better set up. Because when we were that low, I said, oh, we're close to a bounce. No, probably it was going to take us a day or two, and so forth. So that, and then we were at -5. It's actually 3, 4, 6, 4. Now, what is Momo? It's a younger brethren of SB1. Why? Because we were trying to build set up like an oscillator where you have like CI. There we go. That's oscillator. You have 2 lines. It gives you buy and sells. We had to create that. This was done in 2008 after I did an interview in New York. Not interview. I did it as a friendly, no cost to them presentation to a couple of hedgies in New York. I was there for my school, but we had a couple of hours to kill in the afternoon. I did that. Not using this, but an idea hit me because one of the questions one of them asked, Chinese guy, PhD in mathematics, extremely well versed. I think I forgot where he went to school. He had gone to MIT. And so on the way back on the flight, I wrote this. Once I got to LA, I said something is wrong. That's enough is not good for me. I need something to bounce it against, and the Momo was built. So this puts us. This is before any problems. This was May of 2008. This is before the summer of 2008 where everything went nuts. So thank God, because when you're in that pressure, you built in your bias into your indicator. That's not good. And so and this is a very simple rule, Momo. +10, you overbought. -10, you're ready to bounce. And when you get here, that's a big problem, major problem there. Where would that put us? There you go. You see that? Yeah, the major problem down here. And look at the divergence is set up. We went lower in price. Okay, so let's go here. Look how much up we were. This point versus that point between these 2 points. That's a dead giveaway. You buy everything. You mortgage the house, the dog, the second home, the yacht, the wife, everything, the girlfriend, the mistress, boom, the kids, mortgage and buy, boom, and there it goes. Oh, geez. I'm sorry to hear that, Gary. Oh, boy. Says, I'm sorry I'm tuning late. Had to take all my money out of a community bank. Yeah. We got to be careful. By the way, there are a number of smaller banks here. Some of them I have friends there at different organizational level. The big ones can't talk, obviously. So you never put them on the spot. And I have very few that high up. I have more the working levels, mid-level managers and so forth, risk managers, credit managers, so forth, and cigar buddies and all that. And they keep on telling me everything is fine. Well, so it reminds me of, what do you call it? I'm not saying every bank is in trouble. I'm not saying they're lying to me, but I do know one thing. When people say that, it reminds me of, what do you call it? Jim Cramer, what said about Bear Stearns. These are my friends. Nothing is wrong with them. When the stock was 68, I sold everything I could. And I put some futures on the S&Ps. And that day closed at 30. That was a Thursday. He said that on the Wednesday afternoon. I'm sorry, Thursday morning. March, I think 14, 15 of 2008. Before anybody knew there was a problem, other than people like Caffrey over at Big Short, what do you call it? Front Point in New York. Those guys, because they were on the other side of the trade. They were the guys who were shorting the subprime. But anyhow, he said that, so I shorted it. And one of my trades went through Option Express, and head of marketing there, I don't know how he got emails. He's not supposed to. He was not a customer. He's just head of marketing. Well, he took my trade and put the position on, and it was a put spread. And next day, the stock opens at 30. So half is gone. But it rallies. He panics and sells at a loss. That night, it closed at 2. That's a Friday. Monday morning is taken over by Jamie Dimon. Okay, now recently I understand, I don't know who did it, but maybe it was about PacWest, but some other bank. He said, these guys are okay. Maybe it was Signature, I don't know. Well, this bank that went down, he said that. So that reminds me of Jimmy, when Jimmy says, things are good, these are my friends. Listen, guys, that's nothing to do with who's your friend. This is numbers. And the problem is that I think Fed slept at the wheel. Mary Daly should be fired. Head of San Francisco Fed. There was, I understand, if I understand the numbers right, there were 31 action items issued over 18 months, not one day, 18 months, and there was no follow through. What are you waiting? You're waiting the Fox to keep the chicken safe. I mean, come on. So, and now it's somewhere in Hawaii. These guys should have callbacks. I think they should put in a law that if you're a bank and you go under, you lose that your income. You'll see how fast the banks clean up. Remember my interviews with Stocks and Jocks used to say, "Fine, we're glad you're not born here. You will come in and create you'll be a fascist operator." I said, "I'm not fascist, but I know how to fix a problem. You know, if you make it tough enough, then they wake up. Because at the end, we're bailing them out. That's not fair. That's not right. Including if it be just 2 FDIC fees we pay. That means all of us have to pay extra. So I do think they have to raise, though, the minimums. The minimums are a little bit low. 250,000 18 years ago, 15 years ago, whatever that was. 15 years ago, at 2008 was one thing. But, I mean, 250 is nothing. I would say might make it a 2 mil out there so that you don't get, because there's a lot of them. Remember, it's a pyramid. That little part, there's a lot of people, and they all add up. They don't go, because the other problem we have is social media. You hear about it fast, and you can withdraw on your phone. You can sell it. Listen, the reason now it's coming out that SVB was taken over on that Friday, I believe the 10th of March, was that overnight, I mean, the day before they took 40 billion out. You know, Thiel and Company. Peter Thiel and Company took 40 billion out from these portfolio companies. And then overnight, they noticed there's 100 billion queued up. The whole bank was 205 billion. Okay? That's one. The other one said, you guys trust these people. I would go back to 50. 50, 75 billion. You go on that, stress test. Not this BS. And Gary Becker, whatever his name is, who ran to Hawaii, head of SVB, former head of SVB, he was on the board of Daly, San Francisco Bank of Fed in San Francisco. What? You know, you're supposed to watch over him. You can't put him on the board, on your own board. That's one. And two, he was one of the people who pushed in 2008 with the deregulation. That's our problem. We always deregulate when things are good. We never worry about the bad part. We did it in the 2000 or 1999. Last week of December, right before the millennium came, Rubin, Greenspan, and Larry Summers got the Congress to get rid of Glass-Steagall Act. I remember I had fights with my buddies in LA who were in investment banking and so forth because they were saying it's good for business. I said, you don't understand. You don't understand. There's a difference between let's say Dean Witter, who comes from Kmart with the Kmart suits, versus somebody at Morgan Stanley who gets dressed at Brooks Brothers. The culture is different, or Goldman Sachs. The culture is different. They can't function well in all these different industries. We're going to get into trouble. That's how we got 2008. Okay. Now 2018, we released everything. We eased up on these banking, and we pushed up this, the stress test from 50 to 250. I want everybody here that go back and take a look. This is not my research. I read a lot. I don't have time to research myself, but I read a lot. And I do a lot of court reading, court filings. Court filings are under penalty of perjury. There's the ABA numbers filed by the lawyers who post these things. Go there and take a look. We set this up ourselves. Why did we deregulate? Yeah, and that's exactly what, now the PacWest is even bigger. No, is it PacWest? No, I'm sorry. First Republic, FRC is like 240 billion at its peak earlier this year. 240 billion. Again, that wasn't done. Right at the line, right at 250 line, 250 billion, right below the stress test. Anyhow, they are gaming the system. You have to be ruthless with them. Absolutely. Otherwise, we keep on writing checks. Okay? Which is our future. Our future is this debt that we keep on bidding, and it's going to crowd out our future. When the debt gets, when when the Treasury has debt because of its credit rating, it'll crowd out other sources, corporate investment banking, individual borrowing. You crowd those out, and that's bad. Long term is going to be bad. We're borrowing to pay our debt interest, just interest. It's a Ponzi scheme. The biggest Ponzi scheme to me is the 30-year and 10-year treasuries. And there's no question that the Temple, the main building of Fed in Washington, is the biggest hedge fund. So, and one day they'll all come to roost. Okay, now the boys here also. This is I don't get. The boys here and the tail risk, it got lowered. They are not. I think they're being procrastinating. The big boys even. I think when we get to, I don't think we're going to have a credit default. We're not going to have the debt crisis. I mean, or the default on our debt. At least not now. I think it's going to be a punt. There are 8 working days left, or 7 working days left in Congress as of today. These guys can't even figure out which bathroom to use in 7 days. Okay, not going to happen. But that's for popular consumption. This, I mean, somebody sent me this meme that said, White House caved. I said, listen, both are in trouble. It's not just the White House. But the problem is there's not enough time to put something together. So they're probably going to punt it. That's my view. And we may even see a rally. So that's why I don't want to be forecasting myself on this put spread we have on. Remember, if it goes against you, sky's the limit. You got it, Gary. Yeah, I didn't bring it up because what you just told me, but this is what we have talked about in the chat room yesterday. We chat day before, because all these little tidbits of the tea leaves that come out, we have a little discussion in our room. Peter's my head of our moderation. He's very, very well read, extremely. I don't know how he does it. He's way ahead of me in reading and analyzing stuff, so I learn a lot from him too. But we kick it around. We talk about it. We because this stuff you're not gonna get on CNBC. You gotta be aware of what's going on. And I think these guys are procrastinating. These are the big boys. This is the tail risk. The SPX puts. Okay, the tail risk on the bottom side. Remember, it's a tail of like a bell curve, right? You got 2 tails, up and down. We're not worried up there because that's all good and fine. The downside is the issue. Okay, and remember, and we have puts. If it goes against us, the sky's the limit. Okay? So we got to be agile here. So if you're in PMT or PMT Pro, please make sure you're near your emails. Okay? We obviously will give you intel on the Twitter, but we're going to say go to email and read it because we it's a product, so we can't post there what to do there, but we'll just give you a heads up that, hey, you got to do something. Go and read it, see what you have to do. Okay, the rates came down a little bit, except the front end obviously went up, new highs. That's a 7-year new high. Got a little bit of a bear environment there with 30-year. Listen, if it starts taking the S1 out, just remember, these are R1. These are R1s. Resistance, pivot, and support. If it takes S1 out, then maybe we gain some easing. Things are getting a little bit better. But what is the catalyst? Disaster employment. Maybe that crisis getting worse, just in qualitatively basis, because it can't be quantitatively, because that's binary, 1 or 0. But qualitatively, or something like Apple, which comes in just gets has a bad report and give a bad guidance, then we're all into bigger trouble. So TD, okay. Wow, look at that close it was, and that's of course futures. Yeah, we've stopped now for 16 minutes. Look how we pulled up on the spread. The spread we're using again is this is the first week, right? So we're using May contract long and August contract short. Okay, 3 months away, 5th and 8th. But I plot the whole what do you call it, vol term structure, of volatility based on its futures, so you could see where we're going, right? And this is so far as normal. This is okay. You just don't want this thing to pop too high. Then we're in trouble, okay? But this is normal as you go forward to expect more volatility. But if the front pops, yeah, then we got a problem. That's we got a problem. We could be sinking fast, okay? And right now, uh, uh, this was when this gets to zero, but these two match, okay? Again, sorry, it's been a long day. When the May contract matches August, we're at the bottom. We're not there yet. That means it has to get positive or near zero. We're not there. Again, this is another one we have to write a special sigma channel for it because that's a spread. You have to be able to feed a spread into the sigma channel. So we have negative, there'll be a positive 2, but the value is important. It's negative 3.474. When it gets near zero, we got a way to go, and we're at the bottom. As Walter Deemer said, this is the guy we post these charts with, he and I. He says that, see, we didn't drop enough yet. He says, when it's ready to buy, you don't want to. That's how bad it is outside. Could we have one of those events this coming summer? It could be, I don't know. I don't know what's going to happen. Nobody knows. That's why we look at charts. Yeah, nobody knows. Anybody who says they know, don't walk, run. It's all BS. Anyhow, great divergence. Okay, we kept on going, went to a new high, low here. That was a tell. We talked about it in the chat room. This is a tell. On Monday, I gotta get short now. This is it. Can't even get higher up there. I would be happy to short it up higher, but it couldn't even get there. So it was weakness. And then look what we have done. And we had 37. At 25, my ears will perk up. We did have our, I think you guys saw that last week. We did get out a rendezvous point. All three stock RSIs hit each other. And now heading down to this side. Again, that's another area we want to watch. Very simple. Great work by Tushar Chandy. I understand that his book is still around. If you want to get on Amazon, I think we give the description on our suggested reading on the website, the drop down menu. There's no interest in us, yeah. But and you gotta be patient to find his book. His book is basically, it's like I forgot, Interlock. It's like Interlock. It just everybody stole it from libraries or bought it, and nobody even admits they have it. They don't want to share it and all that. Mine, the corner of it was eaten by my friend's dog as I visited Florida for the first time. I kept it there, even with the little corner gone. It was the bounded hard copy. So a little of the back cover has a little chewing on that, and so it is what it is. But the internal stuff is very, very powerful. It actually showed me why this was a great creation by him, and also that we're not done, and that's why I sat down and about a year and a half later, I came up with CI. It took about a year and a half to do that. I didn't work all the time. Remember, I have different obligations, but as much of free time I had. So, all right, Lowry's. Okay, we hit sigma levels and rotates down. This is a 30-minute always. We did not get, we got close here, but it bounced up hard, and now even lower than that. We never got to negative 90. Okay, I would be watching that most likely Friday. Most likely, of course, Admiral Tico posts that on his feed. So if you don't follow Admiral _Tico, TIKO, Tango India Kilo Oscar on Twitter, I suggest you do. Okay, there's no charge. But it's a very good tool, and we also post a PDF for you to read, which describes the Paul Desmond work, who worked for Lowry Research, which is a big firm in, I think they're in Palm Beach now. I think they moved. They used to be in Tampa. Maybe they want to get near more action. I don't know of the hurricane season, whatever. But good group. Yeah, their research on very slow long-term asset management. This is the one that it got shared with me by Peter, and we get Peter Cook. He wrote this. By the way, Cash and I are talking to Peter about a couple of indicators that are from Nations setup. I think there's 4 of them, but here's I have 3. Hopefully we can get Peter to come and give us a talk on this. I think you'll be very, very impressed. This deals with the shortcomings of other data series that you get out of CBOE or CME. So the company's called nations.com, and there's a lot of reading there to read. And of course, he's a practitioner. I'm talking to him to bring him in as a special session, not on a PMT time, some other time, just like I'm trying to get Marshall to come in. By the way, speaking of ore, just came out to me. As you know, we have 2 system houses in Chicago, Stryker and Fox. That this ore is traded there. Okay, if you look, is it June 8th? Hold on, no, well, that's NQ. No, not June 8th. There you go. May 5th. This Friday, this will be 1 year. This is what we have done, net. And we had a lot of problems. Net is what we've done. The commissions are taken out. We had problems. We had too many people in December. We had overfields, underfields, which are rectified. But we'll send a special email this weekend with a box list and then all this detail. We have copies of every single day of trading. That's not my money, it's Marshall. He even maintains it. Why did we do that? Called transparency. I don't want to be involved. I wrote the code. That's it. I had a couple of help from a couple of tracing guys to help me to get to this point. And you could see actually if the versions are changing, we'll point that. I got to go back and research exactly when the 4.91 came in. Of course, this is the end of a month. And Nancy and Cash will be helping me to do a monthly or weekly result of the P&L. But net, that's where we are. This is Monday. We don't have, okay. We didn't trade on Wednesday, and you had to post it yesterday yet. Okay. It has been a little bit difficult at times, but please don't join when things are very, very good, because now it's a cycle through. It's like topping motion. Okay, and that happened in December. We had tremendous. Last year, for example, we had first 3 months were great. May, June, first 2 months. May and June were great. July we got into trouble. Then middle of August, pumped up. September 10th, pumped up. October was incredible because we were going down and it was big. And part of November. Well, by the time results are posted, we have a slew of people come in and created problems in our code, which we didn't know we had. We did not know it because so many people in. At one point, they were trading a couple of hundred contracts at a time between the 2 houses. Actually, more than that, probably. Because Fox was just starting. Fox was starting and they were at 85 after we multiplied 3. So like 81 to 80, maybe 89 is it? I don't forget. Yeah, no, or not. Between 86, is that right? 81, 84. Oh, 84, 87, and Stryker was much bigger. So we were doing at least 200 contracts every time the system was triggered. Anyhow, we will, and this gets updated automatically. I just wrote some code to take this logic here and populate this as every day comes in. And you could see. Okay. Never went negative. We did have a big drawdown from peak to trough, but never went negative. Now, what's the key here? You gotta stay in. You can't tell this month is good, that month is good. Nobody knows. It's just a market texture. But that will go out this weekend. I remember May 5th. Marshall is updating that. He's much better. He's getting back to his balance. He's having a problem with balance, and he's in better shape. So, well, hopefully, sometime in May or maybe June, he can go and give that presentation. We're also going to schedule one for Peter about this nation part. Those of you in analytics part, I know like Rich Ruscio, he'll come in the day before into the webinar. He'll be waiting to jump in because it's analytic type. I mean, there's a webinar by Rich Ruscio on the website of some of his work. Hey, I would keep it handy. You know why? One day you may not be able to fall asleep. And you take the melatonin, you take any medicinal stuff, that you need a card for in Florida. Okay, you see what I'm saying? But better yet, use Rich Ruscio's. Rich Ruscio's stuff. Because, no. What do you mean? What do you mean? No. Listen, even put you to sleep on a cold day. So let's say you're in the Antarctic. You're on some ice station Zebra. You know, remember the movie, Rich? A couple of nights ago I saw it. Ice station Zebra. And you're having trouble because the cold will keep you up. You want to fall asleep? Take a look at what Rich does. Rich is, I mean, seriously, a lot of work. A lot of work. You'd see. It's on the webinar. It's one of our webinars. Go to our webinar page, okay? The open webinars here. Yeah, because some webinars have our product based. Right here. No. And just put in Ruscio. Rich Ruscio. Ruscio is spelled Ruscio. Hey, I say that's compliment because I think somewhere early on I knew how of that webinar. I knew how little I knew. So bravo. But Peter's one of those. Peter's one of those types too. So it should be an interesting webinar by Peter. Anyhow, this is what he did. He does not take the long side. I take the both sides. Okay. Look at the short. Now this got into trouble a little bit, but short. Look at last signal. Short, and short. So I think we're beginning to move down. Okay. Let's see. Those are mine. Those are this online. Trade manager. That's nations and Tiger Shark. We can't go there. Okay. One last chart. Oh, this is one of my favorites. This is when they just started the ENF for Blue Angels, and this is retiring. This is C because we know it's one seat. This we don't know if it's an E or F. I can't tell. I think it looks to me as a E, the single seater of the Super. It's called Super Hornet. Did not work on any of these two. I was way before me. I worked on A and B. But let's see. What do you want to show? Oh, there we go. Listen, Richard, they used to say my book was a cure for insomnia. Yeah. I learned that from Bill Simon, head of Treasury. He actually wrote it, sent me a copy for my birthday because my sister used to work for him. And that's what he wrote there. It says, this could be a good cure for your insomnia. I hear you have insomnia. I didn't, but it was a good joke. So, anyhow, okay. We did talk about last week the break between 45.55. I think we're still holding up, if I remember right. Is that updated? Yeah. 47.6. Yeah. Watch for 45.55. That's the neutral area. We're way below 45. You have a cross here on the two moving averages of 51 and 20, and then the 45 is the line in the sand. So I would watch for that. You can get it from the stock charts. I think it's updated. Must be updating more than once a day because it's so available so early. We're only 5:30 and it's up there. Okay. Yeah. So that's it. That's my spiel. Again, PMT. At one point, based on my count, we're at 47 to 48% return. We got a confirmed fill at 180 from our PMT auto trade in Chicago. So, and that's average because it's a weighted average of all the people in that they pulled the trigger on. And Nancy reports that. So Larry Parkhill over there trades it. Reports to Nancy. Nancy put in the chat. So 180 was in, and we hit 260 something. So net we're at 47 to 48% near the close today. First day. Now we have another 3 weeks to go. On average is 12 days, 12 and a half days are average trading days, average trading days. But I would say sometime next week, be prepared for us to pull your ripcord and tell you you need to get out. Why? I don't know. It depends on Admiral Tico. It depends how he reads the tea leaves. But, you see how he goes in and how precise he is, and we'll hope that he's also precise on the exit. With that said, I am done with this presentation. I've got to get to a conference Zoom call, but I'm more than happy to answer any questions you may have. And thank you for coming. Again, we'll add more features here for the new setup that we did. We had like 400 people there. We lost all of that. Of course, we have copies of it, but the webinar was lost, the webinar series, but the data we have. So we just create a new one going forward, as always posted here. Okay, but it's a new code now. It looks different. What I had to put in, that was much easier. I was about to call him. I was like ready to cry. Right before right before FOMC, it takes a while because this kind of stuff at the GoToMeeting is done by like second tier, third tier tech support. That the guy who answers the phone doesn't know what you're talking about. But we just copied it from my old. You have the old copies. We copied that, but not the people. And then, but setting up all these, it was instant. Boom, boom, done. So otherwise, we'll see you next week. Remember, on the 18th, I'm out of town, but we'll still do it Wednesday, and then I'll be back that weekend. So there's no gap there. We'll make all of these meetings. Okay. And this is part of PMT. Just the chart part is much easier this way, as interactive, and is up to date. And I don't have to sit there on a Sunday and make charts for type errors, this, that. Some chart doesn't come. This is easy, and it's on YouTube. A lot of people use it, and for me to give back. I don't need to protect everything. I'm done. I'm done well. I'm good. I'm grateful to this great country. Yes, sir. I will. Thank you, sir. Thanks, Dennis. Thanks, Michael. Thanks, Rich. Thanks, Gary. We'll see you next week then, okay? And then what we're going to add to this, there's a feature I got to go in there. I'll do it now to remind you. As long as you register, to remind you, because that is gone, but that names are in the email list. We send you the email list saying we register, but this will remind you as we get, I think, 2 days, 4 hours, and then like 1 hour. So you can't miss it, okay? And then what we said, unfortunately, I think the limit is 3 emails. All right, anything else I need to answer? We're good? We all need some rest. Go do that. Tomorrow's another day, another dollar. Okay? All the best. Thank you. It'll be posted within an hour or so, maybe a little bit less. It has to be post-processed. And it always goes to our YouTube channel, which is posted here. The link is here, guys. Go to homepage, actually on every footer, but it's the first thing on this. It's easy to see. Our videos and gets posted there, and we're good. Again, what we talked about today happened exactly what we said should happen. And part of that, Michael Becker is involved. He helped me to walk through that, and by asking the question, I said, okay, this is what I see. And again, we got lucky. We got lucky, please. Yeah, the tea leaves reading is not easy, and I make mistakes often. Plus, you have more than that, interactions. How could I know a week in advance what exactly is going to happen? So it was a guess, okay? But we did good. So. And key was discipline on the trade. The risk reward, always risk reward. We'll see you. Thank you. Have a great weekend too.